Abhishek Jain is also joining us from Arihant Capital. And Abhishek, thank you very much for your time. Let's start by talking about the stocks which you like. And as my colleague Ruchi was talking about government wanting to focus and give further boost to the exporting space, one of the stock picks is actually Gokul Das Exports. It's been doing phenomenally well. Tell us why do you like it and what kind of potential does it hold for investors next couple of quarters?
We see big potential for Gokul Das Exports, as ma'am has recently talked about. The government is further giving further scopes to exports. The initiative which we have seen after COVID, what happened in US right now, there's been a consolidation right now. And India has been turning out to be a favorite place at this point of time because we have cotton raw material availability, while our competitors are facing issues right now. Second, to this particular company, what is happening right now, there has been a consolidation after 2019, the new management taking over right now. They have changed their system, the backlog and everything. They have changed it. They've get a lot of changes happening in the employee level. They got new guy who's come from ABFRL, and there's a lot of order book is there right now. The order book is very strong. They've been in US. What happened? They've changed their business model. While earlier they were selling largely because via selling houses, buying houses, where now they have started selling directly, which has helped them increase their business also. I think in next 2-3 years, they can easily double their business with the margin expansion of at least 200 bps from current level.
Right. Abhishek, also, there's another stock pick of yours, Dollar Industries, from almost the same space. And I was speaking to Dollar Industries management recently on the very show, just 2 days back, strong guidance coming in as far as the expansion is concerned, debt reduction, etc. You tell us, why do you like Dollar Industries and what kind of potential does the company hold, given that it is actually in a space which has up till now been very commoditized?
Ajay, we have seen in the post-COVID, there is an unorganized to organized shift happen in the industry right now. And all three companies which are listed in this particular state, like Rupa, Dollar and Lux, all three have been benefited most. However, what happened with this company right now, they're getting into the premiumization right now. And the premiumization plus they've changed their business model. Like they've gone into the distributor model, just like Asian Paints we have seen where you just call your, there's a delivery vehicle which is next to covering few hundred distributors, and you have to just call, and it's it will be an advantage for and this is help company getting tapped 3x distributor wherever it's launched right now. So I personally think this can easily be a 20% growth rate for next 2-3 years. Easily they can derive. However, the management talks about 15%. At least I believe there's a much higher opportunity with the margin expansion of 15 to 16% going forward. And the stock is quoting at a huge discount. One more thing which is happening in the company, they are also have a JV with Pepe, and I believe that can be a very good online opportunity. This is which the fintech opportunity they are looking with this JV right now. I like the stock, and I believe there is the next one big trigger can be this thing, this JV also, where we are going to see the big opportunity, where the company has already done its capex, which they were supposed to do right now. So no more capex going forward. Even the debt reduction will continue. And one more thing, the working capital cycle has improved for overall industry only.
Point. Let's shift focus and talk about an area of the market which has not been talked much, which is the CV space. The focus of the market is on EVs, particularly two-wheelers because of Ola Electric news flow and big SUV launches. So that's also an area of focus of the market. But CVs, somehow, nobody's talking much about. And you have picked up IndoStar, which is a CV or used CV financing business model. Talk to us, why do you like it and what kind of potential do you see next 12 months?
2 years back, there's been a management change, and in 2019, we have seen the stock 2020, the money has come in now. There are obviously because of COVID, they have faced the pressure right now. Now the management in next 2 years is talking about getting into 100% retail kind of business right now. And CV, I believe with the scrappage policy coming in right now, the government is talking about, and plus their change in the business model, which is more, we are going to see higher NIM expansion also, because I'm just giving an example. The cost of fund has come down substantially. So they have a tie-up with the ICICI Bank where they'll be getting at least 350 bips advantage in the cost saving going forward. So that is also going to help them in improving their NIM expansion. Valuations are extremely relatively cheaper. But I believe the only concern is basically the management has to cut down the stake from 94% to 75%, which is expected in next few weeks. And I believe that can be a very good opportunity one can add in the tranches. And just to add disclaimer, what we believe is like in mid cap side, one should be, if someone is investing right now, should be open for at least 20-25% correction from these levels also.
Well,
Getting
that's
the
correct.
market
As Abhishek was talking about, Indostar is now, remember, a Brookfield-backed
yeah.
company, and they have sought regulator nod for some more time to comply with the minimum public shareholding norms. All right, there is another area which is focus of the market right now, and that is QSR, snacking, eating out, all of that. And Abhishek, you seem to be liking a lot of snacks. That's why you have chosen Pratap Snacks as your next pick, is it?
So Pratap Snack is mainly an unlock trade we have seen right now. So when, like, if you see between 2013 and 19, the company has been growing by 15% CAGR despite of any market going slowdown and everything right now. What they have done 2020 was because of the COVID, the impact have started from the March only right now, and last year was also not great. I think next 2 years the company has is right now it's a more of a pan India player, I believe, where one of the competitor which has a much superior return ratio is now getting into the southern and other markets right now. So where they have a first mover advantage, plus they have done acquisition of Avat Food, which is going to help their expand their product portfolio also. And third, again, the distribution margins have improved. So there has been like from 3-tier distribution in next 2 years, the company is largely covering into 2-tier distribution model. So which will help them in next 2 years. The margin expansion will be 200 to 250 bips at least, and plus the change in the product mix also. So we'll be 95% of these products are basically we are going out and we are eating it. So this is again unlock trade. You can take it. Valuations are very attractive, and plus with Sequoia on the board, there is no question about the management quality.
All right, Abhishek, we'll let you go on that one. Thanks so much for joining us and talking about the very interesting assortment of stock picks which you had for our viewers. With